Hey, what is going on, guys? It's your boy Nick, and today we need to talk about Amazon's earnings that were just released after the bell today on Thursday. There is a lot to unpack in this video because investors really don't seem to be appreciating the earnings, with the stock down 9% after hours. However, there are a few things that I want to point out to you guys why Amazon could still see a huge amount of upside and why I'm still super bullish on this stock. So with that being said, make sure to drop a like on this video for getting this out quickly to you guys, and don't forget to subscribe if you have not already. And with that said, let's get straight into it. Alrighty, so I just finished listening to Amazon's conference call, and as we can see, the stock price is down about 9% after hours to $2,635 per share. Now just keep in mind, guys, the stock has not been at these levels since June of 2020. That is ridiculous. Amazon stock is just selling off like crazy. But anyways, let's get straight into the numbers here, guys. So Amazon in Q1 of 2022 reported earnings, and the first thing they mention here is operating cash flow decreased 41% year over year to $39.3 billion. Free cash flow decreased to negative $18.6 billion compared to positive free cash flow of $26.4 billion in the trailing 12 months ended March 31st, 2021. So obviously, even the great Amazon is not immune to inflationary pressures and a lot of these supply chain constraints, as seen from their free cash flow and operating cash flow being down and them just having much higher costs than usual. They go on to say net sales increased 7% to $116.4 billion in the quarter compared with $108.5 billion in the first quarter of 2021. However, excluding foreign exchange rates, net sales actually increased 9% year over year, which is pretty good to see. Next up, we can see operating income decreased to $3.7 billion in the first quarter compared to $8.9 billion in the first quarter of 2021. So this is probably like a 60% decrease year over year. And when it comes to the bottom line, Amazon did post a net loss for the quarter of $3.8 billion or $7.56 per diluted share. However, they do say here first quarter 2022 net loss includes a pre-tax valuation loss of $7.6 billion, including a non-operating expense from our common stock investment in Rivian Automotive. So because Amazon invested in Rivian not too long ago and the stock price has just done nothing but fall over the past year, Amazon has a lot of unrealized paper losses on Rivian stock, and this has to be counted as net income according to accounting rules. But if we back out this net loss from Rivian stock, they actually produce net income of $3.8 billion, which really isn't too bad, so Amazon is still profitable technically. However, it should be said that Amazon's profits are still down significantly year over year, even after backing out this Rivian loss. Alright, now feel free to skip over this part, but I do want to read what Andy Jassy, the CEO of Amazon, had to say. The pandemic and subsequent war in Ukraine have brought unusual growth and challenges, with AWS growing 34% annually over the past 2 years and 37% year over year in the first quarter. AWS has been integral in helping companies weather the pandemic and move more of their workloads into the cloud. Our consumer business has grown 23% annually over the past 2 years, with extraordinary growth in 2020 of 39% year over year that necessitated doubling the size of our fulfillment network that we'd built over Amazon's first 25 years, and doing so in just 2 years. So we have to realize that Amazon has been investing very heavily into their fulfillment network and basically expanding the whole Amazon experience for many new customers that came on during the pandemic. They go on to say, today, as we're no longer chasing physical or staffing capacity, our teams are squarely focused on improving productivity and cost efficiencies throughout our fulfillment network. We know how to do this, and we have done it before. This may take some time, particularly as we work through ongoing inflationary and supply chain pressures, but we see encouraging progress on a number of customer experience dimensions, including delivery speed performance, as we're now approaching levels not seen since the months immediately preceding the pandemic in early 2020. So because Amazon has invested so much money into their fulfillment network over the past 24 months, they are no longer capacity constrained, and they're able to improve the customer experience by improving delivery times substantially. So that means moving forward, Amazon is not going to have nearly as much capex when it comes to their fulfillment network as they have over the past 2 years. And therefore, free cash flow should start increasing again back to prior levels. Now, before getting into their slideshow, I just want to highlight a few points about Amazon Web Services, or AWS, which is the profit engine for Amazon. So in the first quarter, AWS added a bunch of new customers across many different industries. For instance, in the telecommunications industry, T-Systems, a global service provider for information technology and digital transformation, moved to AWS. They also added Verizon and Telefonica. Then another huge customer that they added is Boeing within the aerospace industry. So this just goes to show that AWS can apply to basically any industry within the world. They also added a bunch of new customers within the sports and technology industries, but I won't get into these since they're smaller companies, as well as the healthcare and life sciences industry. All right, guys, now here here's a breakdown of Amazon's statement of operations, which basically shows their revenue in the different segments across their business. So in terms of the net product sales, this was actually down slightly year over year, so people don't seem to be buying as many products as during the pandemic, which makes sense because they can go out and buy those products. However, when it comes to their net service sales, this was up massively, and this contributed to the growth year over year across their total net sales. So they did see an increase of about 7% year over year to 116 billion in the quarter. Now, taking a look at the operating expenses, we can see the main line item contributing to the most growth in expenses was fulfillment. So this actually increased about 23% year over year. But again, like I mentioned earlier, this should slow down because they have built out their fulfillment network so much that they're actually over capacity right now. So yeah, this should slow down. All right, but now let's get into Amazon's Q1 presentation here, because there's one slide I want to show you in a minute that makes me want to buy Amazon so badly tomorrow if it's still on the dip. The first slide we can see here is free cash flow. So obviously on a very negative trend over the past year, down 171% year over year. So that is not good. But again, due to those high investments into their fulfillment network and of course higher operating costs during this inflationary environment. And I find it pretty funny here. They say long-term goal, optimize free cash flows. Never would have knew it, but thanks Amazon. The next slide here is their net sales. So this is across the entire Amazon business, including AWS, North America, and international. So we can see this was up 7% year over year and up 9% on a foreign exchange adjusted basis. And what we have to remember is that Amazon was growing their revenue at 39% back in 2020 or early 2021. So this really doesn't mean that Amazon's business has slowed down this much. It's just averaging out over 2 years. It ends up being about 20% growth per year. And once we pass this period of difficult comparables within the first half of 2021, Amazon said their revenue growth rate will accelerate again. Here we can see Amazon's net sales over the trailing 12 months, which came in at $477.7 billion. That's $500 billion, guys, just insane. And here we can see it clearly broken down for all of the different business segments. So North America occupying 60% of the revenue, international now 26%, and then AWS only 14% of the revenue. Then Amazon shows their operating income over time. So we can see that it is down significantly year over year, but it is up slightly from Q4 of 2021. So we might kind of be at the bottom right here when it comes to Amazon's worst days. In terms of net income, we have a huge spike in Q4 because of that Rivian investment, and then obviously the Rivian shares dropped, so then we have this huge drop in Q1. But when it comes to actual adjusted net income, these all would be positive, just lower in Q4 and then higher in Q1 2022. In this slide, we can see the segment results for North America alone, and we can see here that net sales were up 8% year over year, which does show good strength in North America, so across the US and Canada. However, this was the first quarter that they actually showed an operating income loss of $1.5 billion, so hopefully this should correct itself once a lot of these Amazon Prime price increases start taking effect within the next quarter. Since people's Prime memberships will start rolling over, and that will eventually increase Amazon service revenue and therefore their income. So right now it's pretty rough with a lot of the inflationary pressures, but that's why they increased those Prime prices so that it could counteract a lot of these additional costs. So we should see their operating income start rising from here on out, if I had to take a guess. When it comes to the international segment results, the net sales were actually down 6% year over year, but we did see that the operating income loss was not as bad as in Q4 of 2021. So things have already possibly started to reverse for the international segment, and we could see this in the North America segment pretty soon. Finally, this is the most important slide in this slide deck and the one that makes me want to buy Amazon stock. These are the segment results for AWS, Amazon Web Services, which is arguably the profit engine for Amazon. And here we can see the net sales were up 37% year over year to $18.4 billion in Q1 2022 alone. Now, if we annualize this Q1 2022 revenue, we come out to $73.76 billion in a year that AWS is already producing, and this should increase by the end of 2022. And despite AWS only making up a fraction of Amazon's overall quarterly revenue, it actually makes the most operating income from any segment of the business. AWS operating income came in at $6.5 billion in Q1 2022, up 57% year over year. Comparing this to their net sales up 37% year over year, this means that AWS's margins are expanding over time and they're taking advantage of economies of scale. This is amazing to see, guys, and just look at this huge jump from Q4 of 2021 to Q1 of 2022. So if we annualize this quarterly operating income of $6.5 billion, we come to $26.6 $1.07 billion of operating income over a year. That is a lot of operating income, and now let's just try and make a valuation out of this business. So let's say that we apply a 40 times multiple on operating income. Well, that brings AWS alone to a $1 trillion business based on a 40 multiple. That's really not that bad. Now, what I want to do is calculate the entire market cap for Amazon stock right now. So here we can see they have 523 million shares outstanding. And then based on Amazon stock price after hours, we can see it's trading for about $2,630 per share. So if we multiply these shares outstanding by the share price after hours, it actually comes out to a valuation of $1.375 trillion for Amazon. And keep in mind, guys, I just calculated the valuation for AWS alone based on a 40 times operating income multiple to be $1 trillion. So if we subtract AWS from the total Amazon market cap of $1.375 trillion, that means you're only paying $375 billion for Amazon.com, their fulfillment network, Amazon Prime, Prime Video, all of these other services, only $375 billion. And the fact that we know these are only temporary struggles for Amazon and they're going to be very profitable in the future, as they did show before the pandemic came around, I think this is presenting an incredible buying opportunity for Amazon stock, because no one's even looking at these AWS results and how incredible this operating income grew in the quarter. And as AWS becomes a much larger portion of Amazon's overall business, this should actually increase their overall revenue run rate, and it should increase their net income growth over time. And the growth drivers that AWS has are incredibly strong, guys. Like, Amazon had a 7-year lead over all of their competitors, and so they're still growing very quickly, like 15 years later. And the AWS business alone should continue growing revenue above 30% for many years to come, if I had to take a guess. And the last important thing I want to show you guys are some of the highlights from the conference call, which actually gave me a little bit more confidence too. So the first thing to note here is that Amazon Prime members have been spending more and more ever since the pandemic began. And then they also have high membership renewal rates, so very low churn on Amazon Prime. And that just shows how good the service is that Amazon is providing, and that means they have incredible pricing power, and they were able to increase these Prime membership prices, and I'm sure they won't see a lot of churn from it. Then they go on to say they expect higher operational stability moving forward. Basically, when the pandemic began, they were overloaded and didn't have enough capacity, but then now that the pandemic has basically passed over and they've invested so much into their fulfillment network, they're over capacity. And as we can see, they've gone from being understaffed in the pandemic to overstaffed, and so they are definitely improving productivity moving forward in Q2, meaning trying to reduce a lot of costs. They say they have excess capacity within the fulfillment network right now, so there's going to be less capex than last year moving forward. In this quarter, they had $6 billion of additional costs, where 2/3 of them are within the control of Amazon, so meaning outside of the supply constraints and inflationary pressures. And that just means that Amazon can become a lot more profitable if they work towards it by improving their productivity and not spending as much on their fulfillment network anymore. There were a few questions about demand, so Amazon reiterated there is strength in consumer demand right now, no softness or macro factors affecting their guidance. They also said there's an $88 billion backlog in AWS revenue. Then they said advertising revenue was up 25% year over year, so this is another very high margin software revenue for Amazon. And if you didn't already know, the Amazon ad revenue segment is actually bigger than YouTube, so this is a huge business for Amazon, and it will bring them a lot of profits, and especially growing at 25% per year, this should increase their overall profitability quite quickly. All right, so what are my thoughts overall when it comes to Amazon's Q1 earnings? Well, I truly think that investors are missing the point when it comes to their AWS revenue growth and AWS profitability. As I calculated, the AWS business alone could be worth $1 trillion at a 40 times operating income multiple, which really isn't that high. And at the prices after hours, we'd end up only paying another $375 billion for the entire Amazon.com business. In my own opinion, I think this is a crazy steal of a deal, and I will definitely be buying Amazon stock on the dip. This is a business with tons of moats and tons of growth levers, unlike many other businesses. I would compare Amazon very closely to Tesla, so I have very high conviction in both of these companies. So yeah, anyways, I am very focused on this AWS income and their revenue growth, so I'm very bullish on Amazon and I will be buying their stock. But let me know what you think down below. I would love to hear your thoughts on Amazon's results and if you would be buying or selling the stock or just doing nothing. But with that being said, if you did enjoy the video, don't forget to drop a like and subscribe if you have not already. And with that said, I will see you guys in the next one.